What is inflation? This is a question that many people are asking themselves as we enter unprecedented times of record levels of inflation. Inflation, defined simply, is the decline of purchasing power for a currency over time. For example, let's say you go to a grocery store and you buy $100 worth of items. The next year, you go to the same grocery store and you buy those same items, except this time it doesn't cost you $100, it costs you $108. This is 8% inflation. So what that means is that you got the same amount of goods as you did last year, but they cost you 8% more. This is the effect of inflation. So not only is it representative of a currency weakening in value, it's also representative of the cost of goods and services rising in price. The reason why inflation exists is because you have central banks and governments all over the world that are responsible for the issuance of additional currency. That means that they essentially print more money when they need it. The result is that when you print more money, the existing money that is within circulation decreases in value. And as it decreases in value, the cost to buy those prior goods, like we talked about previously, increases. Some argue that inflation is necessary for a functioning economy. The reason for this is because inflation creates a situation where, by knowing that your money is going to be decreasing in value ever so slightly by a couple percent, it encourages you to actually spend that money and not just hold it and save it indefinitely. Therefore, when you have inflation occurring, it's more likely that you're willing to spend money earlier as opposed to holding on to it and allowing it to devalue. That is one of the benefits of inflation. The other side to that, however, is that with inflation, your money loses value. So your savings slowly erode. So basically, the money that you put away a few years ago is worth less and less the longer it sits in your bank account. And if interest rates don't catch up, which is the subject of another video, then you're in a situation where your money is kind of just disintegrating, and that's not a good thing either. There are other advantages to inflation as well. If you have lots of equities like stocks, you tend to see an increase as inflation increases because those equities tend to hold their value. I mean, this is a super simplistic way of looking at it, but it is still a valuable perspective. Real estate and property ownership tends to benefit from inflation. As you purchase a property for a given amount, that goes onto your mortgage and you pay that off over 20 to 30 years. But while that principal amount remains the same and decreases over time as you pay your payments every month, the value of the currency decreases, and therefore the amount of money that your property is worth increases. Because over the span of, say, 10 years, a couple percent of inflation, or in the case of this year, 8% of inflation, simply makes your property value rise because of the devaluation of the currency. When discussing inflation, it's often really valuable to take a look at real-world statistics so you can get a better understanding of how inflation is impacting your day-to-day life. With that being said, we're looking at the U.S. Bureau of Labor Statistics. Now, while this is for the United States, no matter where you are in the world, it gives you a good snapshot of what inflation looks like. So this is an official website. I'll provide a link in the description below. But essentially, what it's tracking is the Consumer Price Index. We mentioned it prior. What it essentially is a basket of goods that is like kind of the standard things that people need to survive, the standard things that people buy. And so what happens is this is a tracking from the March 2020 to March 2021. They want to know how things have changed year over year. So what you're looking at here is all items have increased by 8.5%. So something that cost $100 costs $108.50 now. But that is like generally speaking. You're looking at a lot of different things. Food increasing in cost, but a major reason for the increase in cost of food is the increase of cost of energy, which includes gas. We all know that. Now what's interesting about this is that it actually breaks down even further. This is kind of like a general concept. If you actually click on show table here, what you're going to see is an itemized breakdown of how things have changed. And a few things are going to stand out a lot. In the food inventory section here, you're going to see that meat and fish and eggs have increased almost 14% year over year, which is absolutely insane. Energy, right? You're looking at a 32% increase, all right? 70% in fuel oil. 48% in gasoline of all types, right? This is insane. Electricity bills, natural gas, which is going absolutely insane right now as of recording, up 21%. So this is going to be even worse in the April statistics. And then you have new vehicles up 12%, used cars 35%. That's insane. So if you're in a situation where you just need to get to work, a used car is 35% more expensive than it was last year. This is how inflation kills you. And here's the other thing, shelter. We all need shelter, 5%, rent, 4%. This is significant, especially since this is only 1 year. So you're looking at a very significant change. Moreover, you can look at other things as well. So we can look at the average price of selected items. I find this really interesting. So ground beef, in 2002, it was $2 a pound, $2.10 a pound. Now it's almost $5. We're approaching $5, right? That's incredibly expensive. You're looking at, small things like bread, for instance. How has bread changed? You're looking at about $1, $1, and now it's approaching, $1.50, $1.60. Much more expensive. Chicken. How's chicken changed over time? Once again, about $1 in the early 2000s, and now we're looking at almost $1.75. Very significant changes. Electricity, how has electricity impacted us here? Okay, a much more stable growth, but still 9 cents per kilowatt hour, and now we're looking at 15 cents per kilowatt hour. We're approaching doubling. So you're looking at very significant changes. And I don't even want to click on the gasoline. Look at this. Oh, everyone's feeling this right now. Gas is an extremely volatile commodity, but now you're starting to see how this inflation is impacting people, right? Gasoline is incredibly expensive. And while, we're paying $4.31 per gallon now, we're talking about literally, a third of that in 2002. So this is what inflation is. It is the gradual increase of costs of goods. However, the reason why things are increasing is because of the devaluation of the currency. This is happening because our governments have been printing more money, which is kind of the result of the COVID pandemic. They're always printing more money, but in specifics, COVID really created an influx of inflation. If you'd like to learn more, I think you should check out this playlist I have linked here because it is essentially a video dictionary for you to learn all about finance. Thank you so much for watching, and we'll see you in the next video.